Hey traders, what's going on? Jamie Saettele here. It is Wednesday, last day of November, and that's got to be about the most interesting month-end flows that I've seen in a while. One of the more interesting ones, at least. Eileen, how are you? Canwall, firing off some questions here early. I don't have actually as many prepared things to put out right now as far as usually I sit and make a bunch of notes before these webinars because, well, I've been trading a lot of these short-term levels this morning into this webinar. So let's just kind of start with some, quick reviews. It's always good to get the bigger pick, right? And then I will get into some shorter-term stuff, and then I will take questions. Canwell, I got your questions here. I know you want to see crude and silver. Totally get it. We will look at that. So we've got the dollar index, and since last week's webinar, which was actually last Wednesday, which was right here, the last big rally day, dollar dipped for several days, and something about Wednesdays, I guess. So we really haven't gone anywhere since Wednesday in the dollar index, right? It's consolidation. And remember that there is quite the level up here, and it's not just from why isn't this loading? It's not just from the slope line. Recall this is the 618 of this entire move, okay? So it's 101.80. Okay, so we do have D says good morning D. So we do have, there's a lot up here in the way for either additional consolidation or even some bigger pullbacks. I still think that you could pull back into the former highs. At this point, probably looking at the December 2015 high, that would be the parallel that extends off of here. What that pullback looks like, it's not going to be like, a day affair, even if we get it. The seasonal aspects here are still quite interesting to me. If we look at DXY, the seasonals are actually, look, long-term dollar seasonals are actually bearish, turned over as of last week. You haven't had a lot of, accurate tracking this year with dollar seasonals. A period back in May, which called for a strong dollar, did. But once you, it's my experience, and I said this a couple times last year, actually, I remember, once you completely dismiss the potential, for this to work, it's usually when it starts to work. So if you look at the shorter term time frames, this is 30-year here, and then you got 5, 10, okay, in blue, 15 and 20. So the shorter term seasonals actually, are kind of down, at least not positive, into 12.9. So I'm wondering if the map or the playbook here is really to kind of be, prepared for sideways to down, corrective action in the dollar, generally speaking, until 12.9, which is when this intersects. All right. Remember this index. This is the ICE index, and you've got this index is 57% euro, a little over 57% euro, 13% Japanese yen, and then you've got pound, and the Canadian dollar is actually 9%. The other index that we look at is this index. This is the FXCM index. And again, this is the same chart we looked at last week and that I put up, in the post on last Wednesday on Thanksgiving, or day before Thanksgiving, kind of looking at the longer term charts, and obviously still pressing into the channel. We might finally go for the test of the line that extends off of the April high and the January high from this year. So, and it's the same thing as far as where there may be support for this, right? Probably down here in 12,270s or something like that, a little bit below actually the January 2016 high. So the story I'm looking at as far as trading wise, the next number of weeks is really actually going the other way on the dollar, as dumb as that sounds. And mostly that's euro centric, because euro is the big component, of course, in DXY. We've been following the short-term euro chart pretty well as far as the short-term turning points. And before we go through this chart, which is pretty self-explanatory, I've written about it a lot in the last several days, but before we go through that, why don't we take a look at just a reminder for the bigger picture, longer term chart. Okay, so if we go to this, all right. Daily chart, I was looking for us to extend maybe a bit lower last week. The parallels were down here around 105 at the time. We haven't gotten there, of course. And the reason for kind of the switch up on saying, well, let's kind of turn more bullish now, was the 5 waves up, right? The 5 waves up from the Thanksgiving Day low, actually. And that is 1, 2, 3, 4, 5. And we were looking, basically, I was leaving orders to buy it at around 105.60, kind of anticipating or thinking that you would actually get a 3-wave move down into that. Thought maybe it would end yesterday, but when we turned up yesterday, that brought us to the possibility of having, a bigger correction. So A, B, C, sure enough, we got that shorted 106.60 last night. During Asia, we turned down about 40 pips. I moved to break even on the stop. I tweeted that out, was taken out. I was worried about that because of month end stuff, but so be it. Was taken out here, early this morning here, and we dumped right into the level that would have been the target, but we're also was triggered along at 105.55. Okay, this level is big for several reasons. One, from a pattern perspective, you've actually completed. You can even look at this on a 15-minute chart and see how clean it is. Look, even from here, you've got 1, 2, 3, 4, 5. That's a 15-minute chart. Okay. So you should get back, even if the analysis is totally wrong, we should get back to at least 106, okay, which would be the former resistance area, former 4th wave. It's also the week open 106.08. And the other thing that's interesting, of course, is that 105.56 is the high volume level for euro. And that was right here. That was on the 23rd. That was last Wednesday, when euro just completely took a massive dumping, and that was after there was a big durable goods order, big durable goods number that came out, durable goods orders number that came out that really sent euro to the dumps, and the dollar, generally speaking, a lot higher. So It's somewhat similar in the price action between this Wednesday and last Wednesday. They're two totally different things. This is an economic number. This is a month-end flows, but the dynamic is similar in that it's really capitulation, into lows, and it's not a coincidence, in my opinion, that we actually bottomed a few ticks below that price today. So I'm looking higher in euro. Long, obviously, so looking higher here, and we'll see how it plays out. I mean, let the day kind of see what happens. If euro, the first resistance within this really is going to be up, I would be, 106.50, 106.60. You get a better sense of that if you look at the short-term chart. D, asking what's your target for euro, so absolutely. You can see here, this is the daily chart from last night. Look, your resistance here in the place that I would look to maybe, cover some is just up at these range highs, okay, which is 106.50, 106.60. But I do think euro can get back into 108.20 or so. 107.70, 108.20, 108.20 is the median line. Look, depending on, things just seem very emotional right now. So I would not be surprised to see a bigger shocker of a move. The better way to approach this, D, and everybody else, is from a time perspective. So if we looked at that again, here is the DXY seasonals, and we've got kind of a better sense on where support might be in DXY, right? The first big level, of course, would be looking at, as mentioned, the high from last, go back at toggle between all these charts, the high from last December, okay, 100 spot 50. So that's the first spot. Let's say that we do turn over hard. Well, since seasonals are negative dollar until basically the 9th, as mentioned, of December, I would just be looking to let this milk this thing until that point in time. Also, you're going to get more information as we move forward. All right, we're going to get more information as we move forward as to whether or not we actually have put in some sort of a bigger low. As an example, let's just say that we do turn up here, okay, and we break through the highs. Well, you know what? The 100% extension of this move would get you 107.20. Okay, the 1618 gets you 108.23, which also happens to be the lows from back here. That's in March, okay, which was an ECB meeting. And of course, last December's ECB meeting was right here, okay? So as we get closer to this ECB meeting, I don't know if people will remember, necessarily, what happened last December, but that could creep in to people's thoughts and might actually send a boost into euro. So, essentially, we're at the bottom of the range. We took out this December low. We're consolidating. We've got a decent entry down here. If we get up towards the top of the range, we at least go break even, thinking about taking some off. But to give you a final answer on what is your target higher for euro, D, I can't give you that answer right now because I don't want to commit to that. There's a couple big spots that really stick out to me, and one of them is 108.20 because of the confluence between the possible fib, the median line, and of course, the lows from March, okay? But I don't want to give you a concrete answer right now because I really don't have one, okay? So that is, what I'm looking at as far as the euro is concerned. Another way to look at it on this longer term chart here. So each time that we've bounced from down near this parallel, right? Each time we've bounced from on this parallel, where has the, where have we kind of topped? Where's the correction come into? Well, it actually looks like it's on this line right here, which actually extends off of this. Okay, so you can see here, I will draw little arrows. Where's the arrow guy? Here's the arrow guy. All right, so this bounce, see that? Dip. This bounce, dip. Okay, this bounce here ended up being resistance back here. That was the low. And finally, you got this bounce here, but we ended up going through this level. So the big level I would pay attention to from this standpoint is right here, which actually gets you back pretty close to what we're thinking about anyway, which is, mid 108s. All right. So I've got things in mind as far as, what might be a big area, but the two that stick out to me, or I say the three levels that stick out to me big time are 107, 10, 20, 108, 20, and then 108, 70, 80, which is your year open, and this level here. So those are the biggies, okay? All right, so that is euro dollar. Other dollar pairs, obviously, we can't. Okay, D asking about Kiwi. Yeah, you got it. All right, so here's Kiwi. So last night's chart, D, I'm assuming you saw last night's post, and we were looking for resistance in basically the 71.48 to 71.75 region. We did get top last night at 71.69. I actually have us basically at support more or less here for something of a bounce, but I would be looking to sell 71 to 71.05 or so. All right, and here's why. Go to short-term chart for that. We'll just go to a short-term chart here. All right, so we get a little toppy there. Okay, so you have turned down, you have support here. Okay, these little supports, would be looking to sell resistance on a bounce. Stops above this high, which is 71.69, and the level I'd be looking at for support would actually be down on parallels that are just extended from the January to May trend line, which again, the underside of that was resistance today. Okay, you take that and you extend it off of the lows here, because if this was a false break, all right, if this was a false break lower and that this is just a three-wave correction, then the place that you're going to find support is probably going to end up being down here. All right, and then you'd have an intersection with that later this week, in a little below 70.37, which is where you open the week. So rest of the week, what I'd be looking at, D, is basically selling 71.07, stops above last night's high, looking towards 70.37 with the possibility that you could get a bigger break. Okay, the possibility that you could get a bigger break. Those would be my levels going into tonight and probably the rest of the week. Aussie is acting. Let's move to Aussie now, because we just talked about Kiwi, so it's good time to go to Aussie. Aussie does look a little better near term on the downside for several reasons. So Aussie ended up being two equal waves. Kelly asking about dollar CAD. We'll go there next. Dollar CAD or Aussie ended up being two equal waves. Got smashed today. Guys, I still think, and this is the chart I believe I showed yesterday. So 75.40s was the biggie. Thought maybe we tried to get up there. Obviously, we've rolled over real hard here. You still have possible support at 73.60, 73.80s. Okay, within this range. Don't want to chase down at the bottom of the range. It's just not good trading habits. But from here, 74.40, which was the low here, which I thought was going to hold the first time, which actually was resistance last Wednesday, that is going to be your resistance. Okay, 74.40. I think that we go to, and I've said this a couple times, it's on the long-term page. I think that we get to two equal legs down from the high back in April, which gives you 70.88. All right. And Aussie, there are several, despite having a seasonally negative bias for the next few weeks, the dollar that is, there are several currencies that are actually quite seasonally negative over the next couple of weeks, and the Australian dollar is one of them. Okay, and this is on virtually all time frames. So Aussie does tend to underperform in December. All right, you can see that, well, over the last 5 years, obviously it's been a dollar bull market, but even over the last 10, 15, and 20 years, there is a seasonally negative bias, although not significant, but a seasonally negative bias in December for the Australian dollar. So, I'm more keen to selling Aussie, or seeking bearish Aussie setups than bullish ones. Okay, and 74.40 would be your spot to end up as a short. I actually bought some Aussie this morning at 74.40. I got out after like 5 pips because it felt really wrong. So yeah, if we were to get a little pop, 74.40s I think is your area for Australian dollar shorts. Was kind of hoping we'd hold 74.40 and get 75.40 on a month-end fix or something. Didn't happen. But 74.40, okay? And there's a lot there. Week open, low from September, high from last Wednesday. 74.40 is a biggie. All right. So there's that. What about, what's next? Dollar CAD. So no change here. This was the area really that we were looking at, was 33.50 or so. And we didn't get 33.50. We got 33.56, I think, was the low. But you get the idea, right idea. So again, let's just do a quick, daily, we'll do an analysis here. All right. So this is your angle of influence on dollar CAD, okay? Dollar CAD, this trend line is not dead by any means. In fact, it came into work here. And this is a good example of what might be happening in Kiwi right now, right? How do you know, or how would you potentially figure out that Kiwi is higher or lower? Well, here's that move. Okay, it was obviously the good angle to follow because you have the channel lines here as well. So I'll put those bad boys on there and see if they end up providing any sort of support at some point. Okay, my bias in Kiwi is lower, right? There's the potential for big depreciation in Kiwi. The long term, go to the long term page. Okay, this could be a huge wedge. This could be a double top. Well, this is a double top. The target hasn't been met. This wedge rally is essentially just a retest of this entire freaking thing, this drop here. Okay, so that's what we could be in store for. Anyway, with dollar CAD specifically, I'm still constructive on this. And I'm still looking for that 138 region as long as we're above 132.60. That's where this is totally wrong. You came into the level that should end up holding, if this is correct. Okay. This is clearly not an impulsive decline. Would have been nice to get a little lower on that touch here, but it didn't happen. Henry asking, would OPEC deal influence CAD to the downside? Well, as it stands right now, dollar CAD is unchanged on the day, and crude oil is up 8.5%. So my guess is that it doesn't so much matter right now. And again, we have to trade each chart based on its chart and its price. Okay, so while I look to the Canadian dollar, and crude oil together as far as trends are concerned, at the end of the day, what I do in dollar CAD is based on what dollar CAD is doing, right? And not what crude is, not what crude is doing, and dollar CAD is, it's completely out of the picture. So look, I was looking for, it's written about last night and 2 days ago, I guess, in the post 2 days ago, I was looking for this area to be the support area, the 3350s, right? Well, it was 3356 was the low, so it was more, and we are ending with, if we finish today like this, we're going to have a nice long-legged candle, nice doji, and the risk levels down here, and this is certainly very corrective to me, the way this is trading. So let's look at crude oil. Crude oil. Okay. I posted on Twitter to look for 44.54 support. Yesterday's low was a little above there, 44.81. At the end of the day, we are actually just back at resistance with dollar CAD. So it's almost like everything since last week was a wash, right? 49 is a big spot to me. And, macro wise, I guess, if you want to call it that, macro wise, look, what I think. I think that I've written about it ad nauseum. I think that the crude oil low is in place, like the big time, major, huge low. We're comparing and have been comparing the sequence in prices from the 90s to the last 8 years. The turns here have worked out pretty well at times. So, heading into 2017, I think you want to be bullish crude oil on a big picture basis. However, what I think actually ends up happening, I think that what you get here, and hold on, let me go to a clean chart. You can probably see it a bit better. All right. I think what ends up happening is that you get, so you have shoulders, okay, head, a right shoulder. I think what ends up happening is that you get an ascending triangle. All right. 1, 2, 3, 4 touches on the triangle so far. So you have a leg up, you have an ascending triangle. That leaves plenty of wiggle room within this to, move sideways before it really, really takes off. Okay, and seasonal components or seasonal tendencies, I should say, really drive that point home. All right, if we bring in this, I can see Euro still holding up, which is nice. If we bring in, what was I looking for? Looking for seasonal charts here. I have to import my crude oil charts because if you do it with the futures chart, the seasonality, it gets kind of screwed up because of what happens with the contangos and the rollover period. All right, so here's your seasonal price chart. Seasonals and crude have been pretty good. And really, there's nothing bullish on the seasonals until you get to next year. I mean, December historically isn't terrible, but the best month of the year and the big performance is the first half of the year, especially earlier, like in February. So with that in mind, I'm more inclined. I wouldn't touch it here, okay, because there's plenty of room, to get up to the upper boundary of resistance, if you will. But this is when you want to mark your daily and weekly reversal levels, okay? So weekly reversal resistance is the close from the high week, which is 50.96. It's really not that far away. Your support then would be the weekly low close, okay, which would be 45.56. So if I am looking at crude and trading crude, there's your two levels, okay? 50.96, 45.56 as support, in my opinion. That's what I would be looking at as far as trading this. But understand though that if you're fading it up here, you got a chance for a breakout on the upside. In which case, euro, in which case crude probably doesn't stop for a while. So, it's my base case. What I think happens is that crude trades sideways for, kind of the rest of the year. But the breakout on this gets you a target of $64. So, like anything, don't short it up here and forget about it. If that's what you're, if you want to be short crude oil, I think you can get up to 50.96, drift off a little bit, mark time to the end of the year, and then you get to the new year. Maybe it's time to really rip face. Let's go to dollar yen, right? We've looked at euro in detail because it's really been a focus of mine with the levels and everything else that we've been, driving home and talking about in the last couple of updates. We looked at Aussie, we looked at the commodity currencies here. So let's take a look then at dollar yen. So dollar yen, last week I talked about some of the extreme readings that we had, like momentum wise and stuff. And we did end up getting a top, somewhat of a top. We got a top on the 25th. We did pull back. We got into 11.35. We were able to buy more or less by the low over here. Of course, ended up getting out at 13.20. Wanted to buy more, had orders sitting here last night. Unfortunately, dollar yen decided that it was going to bottom beforehand. We got down to 12.05. Our orders were 11.80, and if you remember why, it was because my working assumption, the ideal world scenario, is that we would go into a triangle and go something like this, and then do this move that we just saw. So that has yet to or that has not happened. So what I think is probably going on is that you probably now are going 1, 2, 1, 2. Okay, this is a third. We're probably going to back and fill for a little bit into higher levels. Okay, so there's obvious levels to look for support. I don't think you're getting back to 1276 at this point, but 1330 is an obvious level to look at. But here's the big picture, okay? Let's go to the daily chart. D saying upside target dollar yen. Yeah, so the first level that you've run into is really kind of just hit it because it's the parallel extends off of here. But 114.90 is actually the level that the next level, okay? And that's the February 16th high, okay, 14.90. And it's also, and this is, here's, you know, if I just put this, let me just put this up, because clearly the fork, the pitchfork that we are following is obviously the right one. It's obviously working quite well. Otherwise, we wouldn't be able to identify the support on the median line that, you know, with that precision. Okay, so remember the 25 line, right? The 75 line, right? You consider this 0%, 25%, 50% median, 75%, 100% is the upper parallel. So eventually your target is on the upper parallel, believe it or not. That is textbook, you know, what you'd be looking at, which happens to coincide with 120.20, which is the year open. It's the very end of the year. How hilarious would that be if dollar yen actually erased the entire decline for the year by the end of December? That would be pretty crazy. Okay, but near term, what I'm looking at is the 75 line, because that's where the 25 line was, you know, big time resistance on the way up. All right. In fact, you gapped up that day. That was after the election, if you recall. So really, this is the next spot to look for. And then the horizontal levels, I said 1490, but really it's 1550 is the big one. Okay. So there's 1490, but 1550 is the big one. That is your December low from 2014. Okay. 2014, so 2 Decembers ago. So if you bought dollar yen in 2014 and you held on to it, congratulations, you're back to flat. It is also the 618, 1555, 618 of that entire move down from last June, 2015. There's more. It's also the range expansion level for 1547. Okay. There's more. It's also this range expansion level, 161.8% of it, or 618% of it, 1446. So 1450 has about a million things that line up at that level. And if it were to be, you know, on the, it would be around 12.7, it looks like. Okay, is when it would get up there. So we could be in for a period of back and fill, and then into a top before you get the next, strong reaction in dollar yen. Okay, so as I head into, December, as I head into tomorrow, we really don't need all these things drawn there. We know that this is the big level, 115.50. So as I head into tomorrow, my focus really going to be, just kind of on where is there any short-term structure that we can look at with dollar yen? Because again, if we have 1, 2, 3, 4, 5, 6, 7, 8, 9, you see what I'm saying? We're probably going to do something like this up into that level. You're probably going to end up kind of doing a pullback, because you're going into what's more than likely the end of a bigger move, right? You're probably doing something like this. You want to make 9 waves up from this low to complete 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's probably going to be something more, something like this. It's probably going to be a choppy uptrend into a peak. Essentially you can look to, kind of buy dips up, in my opinion, buy dips up until you get to 115.50, or so. All right. Now methods to do that. Excuse me. Methods to do that. You've got trend line here. That might be support. This trend line right here. Okay. This could be the trend line that you're looking at as support. Again, that's simply drawing a corrective channel and then looking for the corrective channel to provide support on a retest. So again, that does look to be about, actually looks like about the right level. Looks to be about 113.50 or so. So there will be opportunities to pick up, dollar yen on the upside, heading into, again, 115.50. But I would be aware of 114.90 as well. Okay. So that would be your dollar yen near-term analysis, along with the bigger picture stuff. There will be a time to pick a top in dollar yen. I don't think that time is yet, as much as I'd like to say it is. Just again, this is based on the fact that 1550 is the big spot, and you've got, an incomplete sequence. Okay. But if anything, we know that this is the right, certainly the right slope to follow, I think. I don't think there's much doubt about that, right? I mean, beautiful touches here. Too bad we didn't get the trigger on 111.80. That would have been real nice, right? But at least we've got it for the future. So there we have all the dollar pairs that we've looked at. We have pound dollar, which, to be quite honest, I don't know what is going on in pound dollar. If I go to the daily chart, okay, I'm still, wouldn't say haunted is the right word, but I still have this in the back of my mind. We've got the old channel line here. Okay. So there we go. So we've got this, which is basically still resistance. Okay. And we've been trading up into it. We've also got this 618. so if I guess if pound dollar can get through here, I guess you could call that a behavior change, and potentially look to take it up to the next spot. Excuse me. Which I think it would probably end up facing pretty big resistance. You have to look at the longer term chart for this, but I think you'd face pretty stiff resistance up in the 2790s. Okay, and here's why. Okay, monthly chart, red line, 1993, 2001, post-Brexit low even, crashed through it, resistance basically lines up with the former low from July, which is like, again, 2790s, 28. So I would be, thinking that that's a pretty big spot from below. So the setup from here from a trading basis near term, you have this tight consolidation, and if we can break up through it, then I guess you might be looking at potentially buying with tight stops on pound dollar. But yeah, it's a tight consolidation. Okay, so there should be an opportunity on pound. I'll look at it more after the close today. Not really going to do anything here on the fly and make a mistake. Obviously, we were short, or I was short pound. Ended up getting out today, and I wrote at the time that there's really, there's no reason to stop hunt central on month-end stuff, which appears to be the case, right? We got a nice spike lower, a couple of them actually overnight, and here we are right back pressing into range highs. So to me, the feel on this is that pound's going to break higher. Okay, that's what it feels like. It feels like pound's going to break higher out of this really short-term range, but there's no telling. You still have 126 as a level that could end up, providing some sort of resistance. Okay. Eileen asking about pound. Yeah, well, these things, everything cycles. I mean, you go through low volatility and high volatility cycles, right? And for most of the year, I mean, pound was really the crazy mover. I mean, with the Brexit, and then you had multiple crashes. And now it's just the turn. It's pound dollar's turn. It's pound's turn to kind of quiet down a little bit, right? That's really all there is to it. Euro is actually really quiet right now, so euro might be the next mover. I mean, it doesn't seem quiet on a short-term basis, right? You've got a lot of back and forth here over the last few days, but cable, has by far been more volatile than euro this year. So, it's just euro's turn, or pound's turn, excuse me, to just take a breather. Okay, Canwall wants to see silver. Let's take a look. I pulled it up because I knew that you were going to ask, so I already had it ready. This is the same chart as last week, and I see absolutely no change to this. I think at the time we had put this up, and I'd said maybe 1580 is going to be your spot for support, and that still appears to be the case. So far, we have held up. We've held up a lot better than gold has. Okay. And again, I think that's testament to the inflation deal that's going on. A big shift, kind of a generational shift, if you will. But I would be watching for, let's see if we can, this channel, where's the midpoint on this channel? Yeah, All right, so the midpoint on this channel might end up being where you want to look at resistance if you get a bounce, right? And that's also this 25 line. So it's 1720 and 1580 support. So if we get to 1580, that's still where I would, think that you get a response in the market. Okay. Canwall and anybody else out there. Now, gold has been very clean lately, right? We were able to put this bad boy up, and I think I put this exact chart up 2 nights ago, and 1170s ended up holding the first try. We're back at it again. We'll see if it tries to hold again this time. I still say that if you get up to 1200 or so, 1200 is going to be your resistance, okay, for eventually the big low in gold. It does look like it wants to be about 1120, okay, and that's based on nothing more than a simple the simple observation that the simple observation that the median line from the entire decline from 2011 and 2012 is right there, okay? And that median line has given way to really important changes in behavior, right? We had resistance on it, big breakout. We had support on it, big breakdown, support a couple times, right? Back in 2013 and 2012. We didn't touch it until this year, and we broke through it, came back, support, and it really was a big level for the next move higher, the next behavior change. So if we get back to it again, I'm expecting that it provides support, because if it doesn't, gold's kind of like really, really screwed. Okay, so it just seems to be like the magnet, if you will, on the chart. A very important level to pay attention to on this chart. In the meantime, 1200, that's your former low. That's going to be probably resistance if you get up there. All right, but keep in mind, this is 1120s or so. It's it's $50 lower. It's not really not that far away. There is something else that you want to know. I like how this lines up with mid-December with gold. There is a tendency, especially over the last several years, for gold to turn up big time in mid-December. Okay, lows last year, December, lows in 2015 turned up in December, January rally, 2014, December, January rally. I mean, you get it, okay? So I would just kind of, prepare for that, if you will, for maybe an end of year low in, or mid-December or end of year low in the gold market. There is a longer term chart that I think would be interesting to share at this moment. Okay, here it is. What do I have here? What is that thing? All right, so this is a quarterly chart of gold, and essentially you've got the blue line, old resistance, new support last year. So this is reason why I think it's a good idea to look on the upside in gold, bigger picture. All right. So I don't know if we get all the way back down there, but that's 1090. So 1090 to 1120, 1120 obviously on the daily, weekly charts. as far as being, more constructive for gold for at least another leg up within the move lower from October, from December of 2015. Okie dokie. All right. What about some interesting crosses? Well, I actually think that Euro Aussie is an interesting cross here. Euro Aussie, that's Euro Yen, getting into some big levels. Euro Aussie, this is the chart, the median line, right? We continue to bounce, 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 bounce on the median line. If you take out that ridiculous spike on the election, you've got what looks to be, at least to me, maybe like a triangle, okay? This consolidation. It could obviously resolve in either direction, okay? Given my separate views on Euro and on Aussie, my guess is that it ends up resolving a little, you get a move higher out of this, because I think Aussie again goes to below the 71.45 May low, while Euro actually is acting quite positive in the short term, which could obviously lead to a bigger bounce. So if you're so inclined, kind of take a look at this Euro Aussie chart. I don't have anything to work with on a short-term basis here. We are finishing the month relatively unchanged, which, down towards the bottom of the range could certainly be a positive. If you start to see something like this emerge, slopes like this start to work, right? Way too early to play this, but if we were to go up and say test this median line and pause a little bit and pull back, either touch the 25 line or something, that would be, telling me that maybe it's okay to play, a long Euro Aussie position, along with the Euro dollar. Alrighty, cool. Are there other questions or any questions I'd love to address? Any questions that are out there? Before we go, the wild card in this, I would not forget about yay old S&P 500, which is pressed into one of this is that really long-term slope, okay, and we are right into it. And the entire rally from 2009 is now in 618. Okay, take this move here, boom, boom, and you end up getting 2213.50, which, the high is 2214.10 right now. Yeah, Matthew, he goes, Euro Kiwi appears to be bottoming. Yeah, I'm about to give up trying to figure out Aussie Kiwi. Yeah, man, me too. Aussie Kiwi is just a pain. Once we think that you kind of have it figured out, like it's about to do something, it just tanks again. So, I'm sure there's been a lot of money lost trying to trade Aussie Kiwi on the long side. Actually, I know there has been. I myself obviously have tried it a couple times this year, haven't really gotten burned on it, have kind of said, screw this. This is, I think, what we looked at last week, though. And yeah, this is actually, okay. Here's your slope, right? Here's our slope. And this is actually a positive, the way what's happening right here. Let me do something real quick. This is a positive, and here's why. Probably know why. Probably know what I'm going to say. But This is your downtrend line. It was support in July. The next low that we made did not reach that low. Okay, that itself is actually bullish because you have the potential at that point for what we call a raised floor, right? Now it's a downtrending move, but it's still a raised floor. The next low is pretty much right on it. Raised floor confirmed. That was election night. Here we are now working on making a J spike, key reversal, what have you. And guess what? This one is actually above this floor. So that's, it might not look obvious, but it's essentially a massive divergence. And we actually have divergence with RSI on the weekly chart as well. You can see these little magenta guys right here. Divergence, divergence, right? Divergence, divergence, divergence back here. Divergence here would not have worked out. So yes, Matthew, at this point, I would be last week I was a little hesitant. At this point, I'm much more positive on prospects for Euro Kiwi. Okay, and it's because now you have retested. You have the confirmed floor. Now you're reversing higher without going down to support, indicating an even more drastic divergence, right? And this actually really goes along with what we were talking about with the separate crosses, with maybe the potential for, for Euro to actually turn up. And, here we've got about 40 pips off the low right now, so it's acting well. Those little guys worked out well, didn't they? Here and here. So yeah, that's worked out well. And, Kiwi itself, again, we've got the potential for a much more drastic decline. We had a perfect retest or check back, whatever you want to call it, on the trend line and the month open. Obviously, the month is over in a couple hours, but yeah, I like that Euro Kiwi chart. Absolutely, looks real good. It's exactly the type of thing I would look for. All right. Anything else that anyone wants to take a look at or talk about? Eileen, you have a great rest of your week too. Everybody have a great rest of their week. And if you are, here in the U.S. or you celebrate Thanksgiving, then I hope you had a great one. And I hope that you're not too sick of turkey and mashed potatoes and everything else that comes along with it. But everyone have a wonderful, super rest of your week and weekend, and we will talk to you. I know Mike will be back with his webinars tomorrow, I do believe, and have all the other regular research out as always. So take care, everyone. All right, bye.